Hi, this is Matthew Cratter from Trader University, and today I want to talk about how to day trade stocks in 2019. Now, if you're interested in day trading stock strategies, swing trading strategies, things like that, you're going to want to hit the subscribe button right now so that you can see future videos I make about how to trade stocks and how to day trade stocks. But for this example, we're going to be looking at Herman Miller, and the ticker is MLHR. Now, this is essentially an earnings play, but instead of buying the stock before earnings, which can be quite risky, what we do is we let a company report earnings, as Herman Miller did last Wednesday, June 26th, and then we look at the market's reaction to the earnings. And the market's reaction will tell us how much of an earnings surprise there is and how much pent-up momentum there is as a result. So you can see that when Herman Miller reported last week, they showed sales up quite a bit, sales up almost 9%. They showed margin expansion, et cetera, et cetera. So what I like to do is I like to look at the after-hours screener on MarketWatch. If you just Google marketwatch.com screener after hours, you'll get this screen. You can also look on StockTwits. But this tells you, this has a list of stocks that are up in the after-hours trading. So after the market closes, 1 o'clock Pacific Coast time or 4 o'clock Eastern Standard Time. But if you look for stocks that are up more than 5% in the after hours, and you can just get their ticker here, then what you want to do is wait till the next day. And what I like to use is a 15-minute chart. So these are 15-minute candlesticks. I've got Herman Miller right here. MLHR is the ticker. And you can see that it was trading sort of sideways for many days. And then it gaps up. So it reported earnings on June 26th. On Wednesday after the market closed. It was trading up in the after hours. It was trading up quite a bit, actually. Maybe it was trading up, I seem to remember, 10%. But anyway, you look for these stocks, and then you don't buy them until the next day. You wait until the first 15-minute bar has formed. So this is the first 15-minute bar on June 27th, the day after the earnings were reported. And you can see it's a nice green bar. So what I do is I wait until that first green bar forms, and then I enter a limit order or a buy order right at the closing price of this first 15-minute bar. So I let the bar form, and then immediately afterwards I enter a buy order right there. And then I will use the bottom of this candlestick as my stop loss. So if it trades below this level during the day, I will exit. But if it doesn't trade below that level, I will hold it until the end of the day. And what happens is stocks that gap up a lot, as this one did, on unexpectedly good news, they have a tendency to keep moving in the direction of their gap. Now, this is especially true if the stock is gapping above its last 20 days high. And you can see that it hadn't been trading this high for much more than 20 trading days. These are obviously 15-minute bars, so it looks a little longer than it is. And you want to see it happening also on much higher than normal volume. And you can see at the bottom of this chart right here, there's a huge volume spike right here. So in this case, we would have entered right at the close of that bar. We would have put it in a limit order right at 43.35, which is where this first 15-minute bar closed. And then our stop loss would have been right at the bottom at 41.15. And then there are two ways you can handle this. You can basically hold it until the close, in which case we entered at 43.35. The last trade of the day was at 44.08. But what you can also do is continue to hold it and turn it into a multi-day swing trade. And this is because of a thing called post-earnings announcement drift. This is the tendency for a stock to continue moving in the direction of its gap after reporting unexpectedly good earnings. And so you can see here we've switched to a daily bar. And this stock is having an especially nice setup where you can see where it gaps. That's the June 27th we were looking at. And you can see that the stock is trading above this blue line down here, which is the 50-day moving average, which is above the 200-day moving average. And when you have a big gap like this, there's a tendency for the stock to continue to drift for multiple days. And so you can either treat this as a day trade, or you can enter it as a day trade, and then especially if it's profitable, you don't want to hold a losing trade overnight. But if you're in the money, if the trade is making money, you can hold it for multiple days, and you can begin to use a trailing stop on it. So for this one, for example, I would use this, you can see there's fairly good support here at the $44 level. So I'd be comfortable holding this using 44 as a stop. Now, our previous stop when we first entered the day trade was obviously the bottom of this candlestick. But then as the trade moves in our favor, we raise our stop, raise it to the 44 level. And as you can see, this has the potential to continue to drift higher. Another thing you can do is just continue to use the previous day's closing price as your stop loss. So in this case, the first day, our stop loss would be at the bottom of that bar. And now on Monday, when it opens tomorrow, we could be long and then use yesterday or Friday's, the low of that candlestick as our new trailing stop. And again, you can find these, especially during earnings seasons. There are a lot of these that are moving on big news. Again, you want to see big volume, want to see it moving in the after hours, and you can use this Market Watch screener to find these. Now, if you've listened this far and you'd like to learn more about my trading strategies, check out the link in the description notes below, and you can check out Trader University Premium, where I have a number of courses. Learn to trade stocks like a pro, which really will take you from A to Z in trading stocks, price action trading, and swing trading with options, in addition to a bunch of other courses, including a course on real estate investing. So I put a link in the description notes below, and if you click on that link, you'll be taken to this page. And it's a very good place to start. Your tuition is just paid monthly. So for 30 days access, it's just $125. And this gives you access to all of my courses. Not only learn to trade stocks like a pro, but courses on options, courses on real estate, etc. And after you've gone through all the courses, if there's something you'd like me to record a course on, something you'd like to learn, I'm happy to make a course just for you and post it for everyone to learn. So normally this is just $125 for 30 days access. You can watch all the courses, have access to all my books. But for YouTube listeners, I'm currently running a special where I'm going to give you $26 off. And so you just need to use the code that's in the description notes below, which is YouTube 2019. So if you click in that link in the description notes below, you'll be taken here. And we can just click right here, monthly tuition, $125. You click Get It Now. And then there's a little link here that says have a coupon code. So if you enter the coupon code right here, YouTube 2019, and click Update, you'll see the price changes to just $99 a month. So you can get access for $99. You can cancel after 30 days after watching all the courses. Whatever you want to do is fine. I'm also going to be constantly adding new courses and based on listener input. So if there's something you want to learn about options, futures, stocks, I want to make this really the best location on the internet for this sort of thing. Thanks a lot for listening. If you have any questions about this video, please leave your comments below, and please subscribe to my channel if you want to see more videos like this. And also please like this video, which will help other people to find it. Thanks a lot for listening, and I'll see you in the next video.